Hi and welcome to Best in Tesla News episode 220. So Tesla held their earnings call and it was jam-packed with bombshells, and the German OEMs are losing China. Now even the German outlets are saying it. And we got some more headwinds for the hybrids, as yet another study now from the US shows us that they are not as green as we thought. And Ron Baring is saying that we have now reached the bottom for the Tesla stock. And Tesla once again is leading the board in maintenance cost and repairs. And Tesla finally revealed the performance of Model 3. And now, according to expert, it just killed the BMW M3. And Tesla Cybertruck is hitting new record in production and making a fool of GM's EV ramp. And Tesla's version 12 of full self-driving makes some unbelievably human-like maneuvers that cannot be programmed. We are seeing true intelligence emerge. All of this and much more in today's episode. Let's dive right in.
Let's put our living stereo stylus in this groove.
It is not only me that are seeing trouble for the Germans in China, as we have talked about many times before. Now we could see an article in Handelsblatt, one of Germany's bigger news outlet, with a cover article with a headline saying "Crash in China." And thanks to Stecker Auto on X for translating the whole article into English. But in summary, the article discussed the challenges the German automakers are facing in the Chinese market, where they have historically been strong. Recently, their market share has declined from 26.5% in 2020 to 21.8% in 2023. So they lost 5% market share in just 3 years, mainly due to the shift in consumers' preference towards local brands that offer advanced software and technology in their vehicles. The German cars, although still strong in engineering quality, lack in software innovations, which is increasingly important in the era of the software-defined vehicles in China. This is causing German brands like Mercedes and Volkswagen to struggle, especially with their electric vehicles, which are not selling as well as expected. The article emphasized that German automakers must rethink their strategy, particularly in pricing and technology, to remain competitive in China, a crucial market that represents a significant portion of their global profits. Adapting to these market changes is not just necessary for maintaining their presence in China, but is critical for their future survival and global competitiveness. Yes, the Germans have to swallow a huge camel and start seeing their EVs as less competitive than the Chinese, and therefore their prices should reflect that. Because if the German EVs are suddenly cheaper than the likes of Neo, Xpeng and Seeker and so on, they would probably stand a chance, just as we saw with the ID.3 when Volkswagen finally gave in and reduced the price significantly in China. The orders suddenly went up, and that is what they need to do, because as they also wrote in the article, there is no imaginable future for them without China, as this is where like 40 to 50% of their profits are. And as they also pointed out, the ones who survive in China will likely dominate globally as well. But I highly doubt that we will see the Germans lowering their prices under the Chinese, as the Germans will probably never see themselves as beneath the Chinese automakers in EVs. But this pride could end up being their downfall. And we should be able to surf the internet without anyone stealing our data, but that is unfortunately not the case. It is very easy to get hacked, as simple as pushing a button really. That is why I always use a VPN security. So no hacker or internet provider can see or steal my data, and all my data is encrypted from emails, pictures and banking details. So I can get on with my work and don't have to worry about my online security. And that is why I have partnered up with today's sponsor, Private Internet Access, or PIA, that is a world-leading VPN provider, one of the biggest and most trusted VPN provider in the world, as their VPN is 100% open sourced and their code is public so that anyone can take a look under the hood and examine just how secure and private their service really is. Almost no other VPN provider is this transparent, so no wonder they have more than 30 million downloads. Private Internet Access is a US-based VPN provider known for one of the biggest server base in the entire world. Almost 30,000 servers speaks for themselves. I personally have just used them for my travel in China, where I was shooting some video for my upcoming YouTube channel, Best in Tech, but in China nothing that has to do with Google or YouTube is working. I couldn't even check my YouTube status on my studio app. So to have any chance whatsoever to work as a YouTuber while traveling in China, you have to have a VPN connection. But PIA does much more than just change my IP address. Private Internet Access also encrypts your internet connection. This way, it shields your digital life, which is only getting more and more important, as today we have pretty much everything on our computers and smart devices. And PIA works on any device from computers to smartphones and works with all major streaming services, so you have unrestricted access to all your favorite content anywhere in the world and on unlimited devices. So what are you waiting for? Click my link in the description down below to get 83% off Private Internet Access. That's just $2.03 a month, and you will also get 4 extra months completely for free, making this an absolutely no-brainer. So don't wait signing up for Private Internet Access, as it is also completely risk-free with their 30-day money-back guaranteed, and 24/7 customer service is available if you should ever need it. So click my link down below to get the online privacy we all deserve, and a big thanks to Private Internet Access for sponsoring this video. And the truth about plug-in hybrids is coming out, not only in the EU that has stricter laws for hybrids coming, but now the US is coming to the same conclusion, that the plug-in hybrids are not as green as people think. And if you didn't see my video about how Toyota is heading for trouble in Europe because of the new utility factor for plug-in hybrids and stricter emission targets that is coming already next year, you should definitely check that video out. But just the day after I made the video, we see this article from the US, where the International Council of Clean Transportation, that is an independent non-profit organization founded to provide unbiased research and technical and scientific analysis to environmental regulators. And funny enough, they came to the same conclusion as Transport and Environment and the European Union as well. According to the study, which uses figures from Fuely.com and data collected by the California Bureau of Automotive Repairs, plug-in hybrid owners are driving 25 to 65% fewer electric miles than vehicles allowed and consuming 42 to 67% more fuel than EPA estimates. This study doesn't include why this is happening, but that does not really matter, as we already know from Transport and Environment and the European Union's own studies. That is because people that own plug-in hybrid don't use them much as electric vehicles, so don't charge them up overnight, but just use them as ICE vehicles. And because they drive around with a heavy battery and electric motor, they even pollute more than the pure ICE vehicles when driven on only gasoline. So we might also see the laws change in the US, following in the Europeans' footsteps of lowering the utility factor for the plug-in hybrid vehicles, making it represent more the real-world emission they actually do. This is definitely something that will hurt someone like Toyota in Europe, with the laws coming already next year, including stricter emission targets. So if something similar happens in the US, I think Ford and GM is going to regret switching focus to plug-in hybrids instead of EVs, the car of the future. But time will tell, but the truth about the plug-in hybrids is coming out in more and more places. Let's see how long it will last. And we got a lot of great bombshells at the earnings call this week, but we also got some nice stats to dive into. I already made a video about the many bombshells Tesla dropped at the earnings call, so check that one out if you want to take a deeper dive. But Tesla will accelerate its affordable models, so all the FUD being spread thanks to Reuters articles about Tesla canceling the $25,000 car that I also called BS on at the time was completely false. The opposite is happening. Tesla will not only accelerate the next-gen vehicle, but they will come out with more new vehicles that can be built on their already existing production line. But they will be able to implement some of the new things they have learned from the new unbox production method. So within a year, Tesla will reveal even more models. So that should make the Wall Street analysts very happy. They get some more models. And we also got to learn that the Optimus robot might already be doing some real useful work in Tesla's factory by the end of this year and be sold externally already by the end of 2025. But beside all these bombshells, we also got some numbers, of course, and CERN did some nice chart here, showing that in Q1, Tesla made an average of $6,772 in gross profit per vehicle sold. So that is quite impressive after all the price cuts they have done. But CERN also shared why they can keep such a high earning even after all the price cuts. The chart shows the quarterly increase or decrease in the cost to make an EV from an average of $54,248 to $36,721 over just 22 quarters, a 32% drop. While cost decline doesn't happen in a straight line, that is an average cost decline of $797 per quarter. This chart shows the quarterly increase or decrease of the average selling price from an average of $70,055 to $43,494 over just 22 quarters, a 38% decline. Again, while prices decline doesn't happen in a straight line, that is an average price decline of $1,207 per quarter. So even though Tesla has made a lot of price cuts, and some analysts are really butthurt because of that, we can see that Tesla's average price has only declined about 6% more than the cost reduction they have done. 32 against 38%. So even though Tesla has come down from their insanely high earnings of $50,000 per vehicle, $6,772 is still very good compared to the industry. Someone like Volkswagen earns about $1,000 per vehicle they sell. So that is why Tesla still had over $1 billion in profits in Q1, even in a bad quarter, and they expect to return to positive free cash flow already in next quarter. And people have been screaming about EV credits for the better part of 6 years now, that in a couple of years they would all go away. So no one really counted them into Tesla's financial results, but I always kept them in because they might be going away at some point. But as long as they are here, it is money in the bank no matter how you look at it. And Tesla might stop selling the Model S and Model X in the future, who knows, but I'm not going to reduce their sales from their financials because they might go away in the future. They are still part of Tesla's business today. And the people that in 2018 didn't want to count in the regulatory credits in 2018 because they would not be part of Tesla's business of today were clearly wrong. And the amount Tesla has got over the past 6 years is quite substantial. So they are actually quite a big deal for Tesla's capital expenditures. As CERN shared on X as well, this great chart where you can see Tesla's cumulative growth in money from credits. And he also shared this one, showing that since 2018, Tesla has spent over $30 billion in capital expenditure. But a significant portion of that was free. Actually, 26% was paid by Tesla's competitors. Basically, the competitors have been building Tesla's factories for free, enabling Tesla to expand its capacity and accelerate its growth. So trying in 2018 to predict Tesla's financial and growth by not calculating in 26% of Tesla's capital expenditures. Well, no wonder analysts didn't believe that Tesla would be able to grow as fast as they did, as they disregarded 26% of Tesla's capital expenditures. And as Tesla also said at the earnings call, they are not going away anytime soon, as many of the legacy automakers are now backing down. And as I just said, their hybrids will not help them a lot with emission credits already next year, here in Europe anyway, as the utility factor will go down and the emission credits will be stricter. So the stupid hybrids will not really help them over the next 3 years in Europe at all, but make sure they will probably need to buy some more credits from Tesla. And at the same time, Tesla also shared at the earnings call that legacy automakers are really helping Tesla by cutting back on the EV production, because now there is suddenly a surplus of batteries from suppliers. So Tesla sees a dramatic decrease in the price for batteries from suppliers. So the old guys are really just rolling out the red carpet for Tesla, giving them money in credits and making sure Tesla gets cheaper batteries and making room for Tesla to grab even more market share. Tesla thanks you. And we can also see on this chart from Roland that Tesla's energy business, the orange here on this chart, has become a much bigger piece of Tesla's business, and Tesla expects this to grow much faster now, and much faster than the automotive business, as they are also adding another production line to the Lathrop factory, so that should scale up very nicely for the rest of the year. And if you think Tesla is not doing great, well, let's just zoom out a bit and get a little perspective of Tesla's journey of their annual income. Looks like the trend is pretty clear over the past 4 years. And yes, the Tesla stock did make an unusual move after the earnings call. It went up. It normally goes down after an earnings call, no matter how well the quarter has been. But fun to see all the institutional investors trying to time the market, and then we see people like Ross Gerber and Gary Black who have sold at the very bottom, if this is the bottom. But ARK Invest has been loading up on Tesla stocks, and according to Ron Barron, agreeing with ARK Invest, as they think this is the bottom and Tesla will only go up from here on out. So let's see who timed this one best. Yes, it's not easy timing the market. That is why my investment in Tesla is very simple. I even have a t-shirt on it. Just hold it. Not investment advice. Do you own t-shirt? I mean, research. And let's squeeze in the last short news topics into this new show. Yes, it's time for the Tesla shorts. CarMax Spring 2024 Electric Vehicle Consumer Report has revealed that Tesla's two most popular vehicles, the Model Y and the Model 3 sedan, are amongst the most popular EVs in the United States second-hand vehicle market. So Tesla has the two best-selling new EVs and the most popular second-hand EVs. Not bad. And Tesla once again is leading the board in maintenance cost and repairs. So to the people that still believe you have to replace your battery after 6 years, well, here are the facts for you. Tesla's average maintenance cost over 10-year period is $4,035, and that is the best in the industry. And as Florin wrote on X, one of the reasons why Mr. Green EU are all in on Tesla. Lowest repair and maintenance cost, only $4,000 on a 10-year period. Yep, so that is something you need to calculate into your already cheap price of Teslas today. And Mercedes showed off maybe one of the most inefficient EVs on the market today with the new G-Class, with a huge 116 kilowatt-hour battery but only 250 miles of range for $180,000. I don't think this is the right way to get more EV sales, Mercedes, but I could of course be wrong. But let's see if this one sells better than your EQS. And Tesla finally launched the refreshed Model 3 Performance. Oh yeah, and I did make a whole video on this, so you should check that one out, link down below. But Jason from Hackenty had this to say.
But there's no longer a discussion. Like, the everyday enthusiast car has been defined by the Tesla Model 3 Performance. Like, I don't know. It's very upsetting. Like, there is no alternative. This renders the M3 completely and totally irrelevant. I don't see why you would choose, unless you had a commute that was more than 300 or 400 miles a day.
And people tend to forget that Q1 was a tough quarter for most automakers, as we could see with GM. GM's global vehicle sales declined 16% in Q1 versus Q4 and was down 2.5% year over year based on GM's SEC filings. And even though their sales were down, it looks like they are pushing more and more cars to its dealership to get some more artificial sales numbers. The inventory of GM vehicles at dealership reached 534,000 units in March 2024, an increase of almost 30% year over year from 412,000 units that was on the dealer lots. That is sold in GM's books, but has not been sold to customers yet. At least Tesla's numbers are from units that have actually gone to customers, so GM's inventory has only been going up every quarter over the past year. So they have just increased the sales to dealership, but the sales were negative year over year. But they still took out $1 billion in credits to enable a $280 million buyback, so that GM's biggest shareholder, Mary Barra, could get some more money for the great performance she has done, like making their EV sales drop about 20% year over year, and GM is shrinking, as you can see on this global market share data. In Q1, GM's market share dropped to an all-time low. Mary, you led and it mattered. And Mary financed a buyback with almost $1 billion in new corporate debt, as they only had $370 million in free cash flow. And for GM to celebrate how great the Lyrics sales is, well, AJ made this chart to put it into a little perspective. Compared it to the Model 3 ramp that almost killed Tesla, and the legacy automakers made fun of Tesla's small sales numbers. But compared to the Lyric, the Model 3's ramp looked like a rocket ship. GM EV sales can really not be described as anything else but a flop. And let's take a look at the EV adoption that has dropped off a cliff. No, wait, what? Still growing? Well, my bad. I just heard that a lot from the mainstream media, but I guess they were wrong. And the Cybertruck continues to get more and more celebrities on the list of owners. Here we can see Katy Perry with the new Cybertruck. And we learned at the earnings call that the Cybertruck has reached 1,000 units in production per week. So that is really good news and should put all the haters to rest, that it would never be produced and then it would never sell more than the 10 they delivered at the event. Now it is outperforming all GM's EV pickup trucks combined in Q1, even though GM's Hummer EV has been in production for more than 2 full years. As I showed in one of my recent videos, the Cybertruck is actually the fastest growing EV pickup truck in history. Want to learn all the numbers? Check that video out, link down below. But yes, the Cybertruck ramp is doing great. And if you need some visuals to why I also say that Tesla's safety assist feature is better than anyone else's, well, here is Europe NCAP's test of Tesla's safety assist feature that scores 98%, whereas Mercedes EQS and EQC gets about 80%, not really in the same class, which you can also see in this video. And I just learned about Kenya's plan to transform fully to EV buses by 2027, so that is pretty cool. The E8 Kubwa electric bus from Basigo was developed for Kenya. It is built in Kenya and is powered by 90% renewable energy from Kenya. The model is tailor-made for operation in Nairobi. Basigo CEO said the company aims to deliver 1,000 locally assembled electric buses over the next 3 years and create 300 jobs in the green manufacturing in Kenya. And as he said, we will assemble 20 buses every month and we have a lot of orders. We intend to work around the clock to increase the numbers as demand may increase with time. Nice. And I just got even more excited to go to the Tesla Takeover event in Austria next month. And I hope to see some of you guys down there, because Tesla Owner Clubs Austria just showed off that they got a Cybertruck that they can show off at the event. Ooh, can't wait to see this beast in real life. And what a surprise, another lie blaming Tesla's autopilot for accident the driver did. Tesla driver who blamed autopilot for a hit and run plead guilty to dangerous driving. And we got to see Tesla's trolleys that are transporting Tesla's megapacks from the factory to the outbound lot in action. Nice. And we got a great example of Tesla's version 12 full self-driving doing human-like things that cruise and famous vehicles would never in a million years do. Look at the traffic here, and the road is basically blocked by vehicles, but Tesla sees the traffic is stopped and squeezes in between the stock cars. Wow, that is a nice edge case that no one has programmed the car to do, but it understood what it needed to do. Now that is some true intelligence at work right there. So before we end off with a bit of fun, I just want to make a quick shout out to my newest YouTube member, Kevin. Thank you so much for all your support. I am doing this all by myself, but you guys are all the producers of this new show. Thank you. And let's end off with a bit of fun that even Elon liked on X. So once again, we will turn to Ryan's Model Y for yet another fun little video he's made.
I'd never buy a Tesla. I don't want to support Elon Musk. Wow, that was one of the best meals I've had. Yeah, but I think the head chef has been tweeting about some pretty controversial stuff online. I couldn't give two shits. If he makes the best food, I'll keep coming back. Yeah, so tell me why you don't like Tesla again?
That is all we have time for in this new show. Hope you enjoyed it. If you did, don't forget to hit that like button. It really does help this video out a lot. And if you did like it, maybe you want to consider hitting that subscribe button, notification bell, so you don't miss out on future videos just like this one. And if you're already a subscriber to the channel, thank you so much for the support. But if you want to support the channel even more, remember you can, for as little as $1, become a patron of this channel, or become a member of the YouTube channel to get a shout out as some extra perks like early access, ad-free versions of my videos, exclusive videos. So hit the members button or check out Patreon to find out more. And don't forget to follow me on X. I post pretty much all the news as it comes out and a lot more. And check out the merch store to get some merchandise and support the show. It is also possible to support the show without becoming a member or a patron. There is a donation option down below or on my website bestintesla.com. You can also become an executive producer and get news articles, exclusive videos, behind the scenes, and access to all my research charts and spreadsheet also on bestintesla.com, or as simple as hitting the super like button. And thank you for watching. And until next time, take care out there and be nice.